Hi everyone, welcome back to Be Rich. It's me, Vinod. Today I want to talk about how come suddenly all the bank stocks are up and what is this happening. Is there an explanation for this? So I thought I'll walk you through what's happening with the RBI stance on the policy of the rate, which has a direct impact on the bank stocks. RBI recently, on 9th of April, cut the repo rate by 25 basis points to 6%. This stance is from neutral to accommodative, citing the easing inflation, growing economic risk. So basically saying Trump's tariffs are going to create some damage to us. So let's be preventive towards this and premeditate the implications to our economy and lower the interest rate, increasing cash flow to our economy, so-called stimulating our economy, domestically at least, to cushion if there's any downfall from this tariff. Well, that has a direct impact on bank stocks. Why? Because RBI is the banker's bank. All banks bank with the RBI, and RBI controls funds flow from inside into India and out of India. It's all through RBI. RBI is a gatekeeper. So the immediate impact, what happened was the stocks initially fell, thanks to something known as a net interest margin. What is the net interest margin? Net interest margin, for simple explanation, is, let's say you deposit 5 rupees in the bank or 10 rupees in the bank, and the bank says, I'll offer you 5% interest. And bank in turn takes it and lends it out, and they give a loan on your 10 rupees out in the market, and they're collecting, let's say, 10. So out of that 10, they pay you 5 and they keep 5% profit. When RBI drops the interest rate, immediately the loans which these banks were offering, those from 10%, they drop down to whatever. Let's say they drop down to 8%. So the difference, the net margin which they were making, the profit between the loan they were offering and the deposit they had to pay you, that from 5% shrinks to 3% immediately, because interest in savings take a little slower when it comes to dropping. They don't drop at the same velocity as loans immediately drop, because simply banks can compete against each other. So immediately any bank want to take the competitive edge to the market immediately will drop the interest rate on the loans. For the subsequent rally, what has happened since April 15th, the Nifty Bank index and the major banks have all gone up by 2 to 7%. IndusInd, of course, has gone up almost from the lows where it was, has gone up almost by 25%. That means if you had faith in IndusInd, like my brother was saying, and you had invested it in this IndusInd, you must be looking pretty happy right now, seeing the returns in IndusInd Bank. Those of you who have entered IndusInd at a much higher price must be feeling a little better now that the price came back up a little bit. This is mainly driven by the expectation of loan growth and treasury gains and valuation support. Loan growth is very simple. Like I said, loan interest charged on loans have come down. That means consumers will be more inclined to taking a loan. That is the hope. So this will, of course, give more business to the bank. This means their overall profits will go up. So investors feel this is one reason. The second reason is known as treasury gains. What is the treasury gains? Banks have to take their money and they have to park it somewhere. They buy government securities. These are at fixed interest rates, let's say at a higher interest at 10%. Now these treasuries have dropped down to, let's say, 8%. That is a difference of 2%. So banks theoretically can book profit on these treasuries they have at a higher interest rates by selling them for profit and book these interests. So that is another reason why investors could be looking at it, and overall valuation supports for these banks have improved, so they're looking at this. So this what you call net interest margin versus treasury gains, lower interest squeeze, this could also boost value of these banks because of the government treasuries they're holding. Loan growth and quality assets are improving. That means because of the aim to improve the credit and demand and improve this, RBI lowering it will increase loans, and also, of course, there's been improvement in repayment capacity where the NPAs on the broader economy have started improving, is what they're saying. This could also mean signs that the economy is turning around. The pain in the microfinance sector is coming to an end, and things are going to start turning around because most of this has been written off. This also could be a main reason why there's a shift. Most of the shift has come from investor sentiment, who feel all the short-term worry and is behind us. Most of it seems to be medium to long-term optimism towards the Indian economy thanks to what the RBI has done. This has also given a major push to the banking stocks and the Nifty Bank. Is this warranted? Should we have a positive outlook towards the Indian banking stocks and what RBI has done? That is something I would say you'll have to wait and watch. For those of you who are still looking at banking stocks, there are still a few banks which are at great value propositions and you can still consider them. Some banks are starting to head towards the region where it's starting to probably be too expensive. So keep this in mind. And none of this is set in stone. What the market feels and how the market reacts is nothing grounded in reality. These are expectations of what will happen in the future. We are currently still in a situation which is very dire to say the least because of what is happening globally with the tariff and what's happening in trade wars and domestically speaking. Yes, we are talking about how to improve the economy and things like that, but demand has to improve, especially in the lower half of our economy. Demand has to improve and there has to be some real growth for you to start cheering about. If anything, like I said and my brother's been saying, there is a huge tidal tsunami of layoffs which will come in the IT sector and Indian services sector. The IT sector is a big employer, not only primarily, secondly and thirdly in terms of the support economy which is going to be supported by the IT sector. So if IT people are laid off, offices are not required, food stalls are not required. You can imagine the wider implications of this is going to be huge for the Indian economy. So I would say wait and watch. Let's see what happens as the year progresses. One of you did comment saying when the Infi was laying off, you guys were feeling negative about Infi. But when Dr. Reddy was laying off, you guys are feeling it's positive. I'm not saying it's positive or negative because of the layoffs. I'm just generally talking about the business model which these companies, they are different sectors. They're sectorally speaking, Infosys is under pressure thanks to AI and all that's happening. Dr. Reddy, yes, this could be cyclical in terms of the layoffs or whatever, but overall, pharmaceuticals is not going to be replaced by AI, and human beings, being biological creatures, will require some form of supplements and supports in terms of pharmaceuticals. So we will need pharmaceuticals going forward. But what happens to the whole IT sector as a whole is something we'll have to wait and watch. This famously goes back to the early 1900s when there's a famous photo of New York City, Manhattan, the main road being filled with horse-drawn carriages and there's one car. Then 10 years later, they show the same street where it's full of cars and there's only one horse-drawn carriage. So maybe AI is going to have that kind of an impact in the IT sector. How it's going to transform. I'm not saying there's not going to be any employment in IT. It's just that the kind of employment that is required is transforming. That means people have to reskill, upskill, and refit themselves to come into this new economy which will appear. That will be violent. That will be setting a lot of seismic shifts in our society, and we'll have to keep an eye on it and invest accordingly during these times. There will be opportunities even in the IT sector. As those opportunities arise, we must be brave enough to embrace them and invest. Right now, my advice would be to wait and watch as far as the whole IT sector is concerned. Even if big companies come into what we consider value buying propositions, I would say let's take a breather before we decide to really dip into them. This is what I wanted to talk about today. Today is Good Friday. For Christians, it's a day of reflection and pondering. For the rest of us, it must have been a day off. And if it was a day off for you, I hope you managed to get some rest and relaxation done. I'll be back again tomorrow to offer you some more insight in terms of investing in stocks. Do look out for that tomorrow evening. Nothing else more to say other than have a wonderful evening and see you tomorrow. Good night.